Hey everybody, welcome to CoveredCall ETF Investing, your central hub for deep CoveredCall ETF data. And today's video, new tracker is out for June, which means we're going to be going over what's new in the fund. I got some good visual cues that will make things a little bit easier to understand AUM changes, assets under management, and liquidity changes with the 3-month average volume. New funds have been added. And so we're going to go through yield changes and also the changes in distributions for CoveredCall ETFs this month. Also, before we start, on June 15th, I'm going to be running a workshop over on my Patreon of how to fully use the CoveredCall ETF ALLSTAR tracker. It's going to be a live workshop. We'll do that for about an hour and then we'll do a Q&A. So if you want to be part of that on June 15th, just become a Patreon member and come and join. And also in July, the tracker takes a big upgrade and we're going to be switching from a static tracker that has just the info that you see for 1 month. It's going to become a live tracker, and the info will change on a basically hourly basis. I think it's every 20 minutes or so it'll be updated. So lots to look forward to, lots to get into. Let's go. All right. Let's get into the CoveredCall ETF ALLSTAR tracker. What is new to the tracker this month? As far as things that I've added, whether it be columns or different tabs, we'll talk about the new funds that have been added. We'll talk about the yields this month and the distribution changes month over month for the Canadian CoveredCall ALLSTAR tracker tab. So let's start with what's new to the tracker this month. Well, it's a simple change, but I thought it was a worthy change. With all the other trackers, this was a lot of info to look at. It was just simply numbers. So this is all the assets under management for every single Canadian CoveredCall ETF out there. And I kind of wanted to make it a little bit more easier on the eyes to dissect, what funds are healthy, what are the trends with the month over month change in AUM. So I just added a percentage change month over month to all of the CoveredCall ETFs, both here for all the American funds and Canadian funds as well. So we can easily filter by, just what, we still have year to date. That hasn't changed. I got rid of just the monthly tab since, right, we can now see the monthly change throughout each month. And I figured, this is just a much better way of identifying, what funds are healthy, what funds are kind of on the rocks a bit, and it's just a visual cue. You can see it with what's red, or what's healthy, green. And anyway, I think it'll just be a little bit easier on the eyes, and you can kind of focus a little bit better instead of really trying to have to, look up a fund and kind of maybe do some basic math in your head. This is just a really easy way of knowing that difference. So I've done that for the AUM tab. I've also done it for the 3-month average volume as well. Just remember, AUM and 3-month average volume, why are these things important? I bring it up every single time I do one of these tracker videos in relation to the Canadian tab, is that we're looking for, opportunities as far as which funds are healthy, but we're also looking for what funds are kind of struggling a little bit, right? So for instance, let's just do an example. We'll do an example here. We'll go down the bottom. So if we filter by year-to-date change, right, we can see a lot of funds have, there's a bunch of funds here that have kind of been declining in liquidity since the beginning of the year, since I launched the tracker. So anyway, these are just good ways of just identifying, okay, maybe which funds to stay away from, maybe identify funds that maybe prove your convictions right with just healthier funds. But ultimately, not all these funds are going to be around 5, 10, 15, 20 years from now. So we want to be ideally in funds that have that sort of longevity momentum or have the potential for going the distance, right? I'm 34, so I plan on investing in these things for many decades to come. So obviously it's very important for me to be picking funds to get into that will be healthy going forward, and not just weird micro niche funds that may struggle, not just in the long term, but potentially in the short term, or they will vanish out of existence to maybe capitalize on just a trend that's maybe happening right now. So anyway, that's what's new to the tracker, visual cue in the 3-month volume tracker tab and the AUM. Now, I was thinking of doing this for the yield tab as well, so we can see that we're tracking yield month over month, at least based on the price of each of these funds at the end of each month. Right, so this yield is based on the last trading day of December. This one's based on the last trading day of January. This one's based on the last trading day of February, right? So, but I figure, if I add another percentage in there, I think it'll just be confusing. But if you guys want that in there, I can certainly add it just to show you how much the swings in yield have been making. But I figured you can easily see this for yourself. It's not like a dollar figure. This seems a little bit more daunting to try to mentally figure out versus say yield, which might be only off by say maybe less than 0.5% in the meantime. All right, let's go back over to the Canadian tab, and we'll go through some of the funds that have been added. There's about 9 funds in total. 6, I believe, are Canadian, 3 are American. So we'll go down to Global X here, which used to be Horizons ETF. So this is the first tracker where I've changed the names over. You can see that we got 1, 2, 3, 4, 5, and 6. We got a bond fund pays, which kind of just, honestly, it looks to me like SPay. Let's see, short-term government bond premium, and we got short-term U.S. Treasury premium. Anyway, in my mind, they kind of just look the exact same. I don't exactly know the difference between the two in that regard. EQCC is basically just a non-leverage version of EQCL. So this basically will have all of your, it'll have your S&P 500, NASDAQ options. It'll have the TSX 60, and then it has an emerging markets and developed markets CoveredCall ETFs inside of it. Then we get to the other brand new funds. Okay, so this is basically an all-in-one fund. I'll need to change that to all-in-one. EACC, a new fund, which is a developed markets CoveredCall ETF, and a leverage version of that fund, 25% leverage. And then we got an emerging markets CoveredCall ETF, and an enhanced version of that, a 25% leverage on emerging markets. So these are the first more specifically developed markets and emerging markets CoveredCall ETFs here in Canada. Also, Global X has also changed the name slightly of some of their other funds, so you'll also kind of notice, I guess that would be the other change to the tracker based on what Global X has done previously. Horizons ETFs is for, let's go to an example like CNCC, the Global X Canadian S&P 500 TSX 60 CoveredCall ETF. Well, this used to be the Canadian large cap equity CoveredCall ETF. Same with the USCC, wherever that is, down here. This used to be the US large cap. But anyway, I think they just want to make it a little bit more easy to identify. Large cap versus, say, S&P 500. More people have heard of the S&P 500, whereas large cap is a little... There's more ambiguity behind that. I think people got to think a little bit harder of like what constitutes a large cap stock. So I think those changes on Global X's part, I think that's a wise move. It's just easier on the eyes, and ultimately that's what we need to do when we when we're thinking of, branding these funds, just make it easier to understand right up front. So as investors, we know what to expect. So that's pretty much the changes on the tracker for this month. Let's actually get into yield and look at some of the highest yields that we can get now in Canada. You'll notice again, there are no yields ready for the new Global X funds. That's because these things just came out on May 22nd and May 29th. So there has been no distributions that have been declared so that we can actually use that data to get a forward yield for this column here. So until that distribution comes out, we have no visibility on what the yield is. Let's take a look at, Tesla always seems to be near the top of the heap here. They just always seem to trade above 20%, which is, it's a great fund. I should say it's a great, for many people that will come across as like a really great yield, and no other funds seem to touch that 20% mark other than why Tesla. Okay, so then we got let's see, this one's notable, EBNK. This fund just had just a massive distribution increase. I think I'm just gonna go straight over to it just to show you guys. EBNK, its distribution rises 141%. I don't know what is going on here. Something similar, maybe a month or two ago, happened with QQQY, both by Evolve ETFs. Anyway, they jacked up the yield on QQQY, and now they've done it with EBNK. So this is it is an interesting pattern that might be forming here with Evolve ETFs. The strategy hasn't changed. Evolve typically writes, they usually put their funds in a 33% coverage, meaning that the other 66% of the fund can just participate in normal market growth, whereas the other 33% might have a little bit of wiggle room to grow. They usually write calls 2 to 5% out of the money. So again, they're in that 33% window that coverage is on. The fund can maybe rise maybe 2 to 5% potentially. But anyway, EBNK, I think it went from maybe 7% all the way up to, or it was at 5%, 6%, all the way up to 15%. So very notable in that regard. And then we have the sort of usual suspects. If you guys follow these tracker videos every single month, at the top of the heap, it doesn't really change. ENCL, it's got 25% leverage on this energy fund. HPYT, no leverage on it. The highest yielding bond ETF here in Canada. We got Bank. Basically, this is the biggest. It holds all the 6 banks plus some other financial service company and insurance companies within it. I believe 10 funds or so in there for a nice, respectable 16.5%. Again, BKCL, no change, not much change here, almost touching that 16% mark. QQQY, HMAX, UMAX, QQCL. These are just the regular, usual suspects. Always seem to be at the top. So EBNK making the biggest splash into basically, I would say, the top 10 here. Really, the top 20 have not really changed all that much. I know that EQCL, they raised their distribution recently. They'll probably raise it again now that the fund has added EACC and EMCC into the fund. So basically 40% of this fund was a different style of emerging markets and developed markets funds, but now everything in this fund is fully CoveredCall ETF based. But either way, they recently raised their distributions, now almost up to 12% with that extra lift. We could probably see EQCL probably somewhere in this section here. Let's see. What else do we got as far as yields are concerned? You know what? Let's head over to the yield tracker. We'll let's just figure out actually what yields have risen, what yields have fallen over the last month. Okay, so we can see EBNK with the biggest yield change at 136%, along with its US dollar version and its hedged version of the funds. Let's see, we got some smaller yield changes with EMAX and AMAX. There's a couple of Hamilton funds that have risen in yield. Again, typically, if prices go down, yield is going to increase because it's just based off of the current distribution times by 12 divided by the current share price. That's how you can get the forward yield. So anyway, not much significant yield changes other than EBNK, but which ones have fallen? Usually, if a yield has fallen quite substantially, we could expect that the the capital price appreciation in the fund has probably jumped. So we got Nvidia, we got Bitcoin, we got Apple, so a lot of the single stock purpose funds, no doubt in my mind that these have increased substantially, especially Nvidia. And then everything else kind of in the -3%, +3% range. So some maybe not bad pickups if in the last little bit here. This past week, since I recorded this video, last week of May, we've seen the market just take an absolute tumble. And that might just be putting it mildly, but I'll use that lingo for now. But man, in the last half an hour of that trading day of May, then the market just rebounded in a pretty crazy way. Okay, so we're pretty much done with yield changes there. Let's just kind of filter back over to, let's see, what are the biggest increases this month in distributions, right? Because yield can change by a different margin than the distribution, right? Because price bounces around and yield is more associated with price, so you can certainly get two different numbers with distribution changes versus yield changes. So let's go through some of the highlights here. Monthly changes from the Canadian side of things. Let's see, we got TXFB, which is a hedged version of TXF. Okay. Oh, you know what? I always got to mention this with CI. Their distributions, and I put a little note here. Their distributions, anything that says CI, is based off of currently it's this. Distribution is March, and this distribution is basically it would be December for only CI funds. Don't worry about the other funds; those are up to date. But because CI does quarterly distributions and they're variable, they don't catch up. They don't update it as often. So to get their yields, I have to use the prior two distributions, which were in December and in March. So I don't want anyone to get confused by that, because typically CI in distribution changes ends up usually at the top, but it can be a little bit misleading that way. So that's something to understand. As soon as the distributions for June come out, which are usually in the middle of the month for CI, I won't put it on the next tab. I'll just update it in the most current one, and basically going forward, you'll see basically the June distribution and the March distribution for the next couple months. Unfortunately, that's just how I have to do it with CI. It makes it could, I know, come across as a little bit confusing, but anyway, I have little notes here beside with every ticker just to explain what's going on with that. Okay, so as we head down the list, a lot of CI funds, but what's most notable here is Hamilton has once again, what is this, the fourth time this year that they have raised their distributions. Now, I love it as an HYLD holder, as an HYLD.U holder, as a HDIV holder. A lot of basically I want to say maybe 40 to 45% of my total portfolio between my wife's spousal RSP and my TFSA is locked into HYLD first and foremost in the spousal, and then HYLD and HDIV are about, call it, they're about maybe around 14% each inside my TFSA. So I benefit huge when these guys decide to raise their distributions, and once again for the fourth time, they raise them once again. Very notable. Whatever these guys are doing, I just hope that they keep it up. And actually, I believe HYLD now is at the highest distribution it's given out in its history, which, I mean, it's not a long history, it's about 2 years, but nonetheless, it's the longest history that it's got going. At 1430 here, which now it's fully made up for the decrease we saw last year, which was a full 2 cents, going from 14 down to 12. And this year, it's rebounded in a pretty significant way to get above that pre-cut distribution. As we head down the list, as you guys know, I love seeing zeros also. I know it's not as exciting to talk about, but why do I like seeing that? It's just the industry is stable. All these fund managers, they seem to consistently give out stable distributions, which I like to see. Again, not as interesting to talk about, I think, for most people, but I still like it. And then, as always, there's always like a couple of funds at the bottom of the list that are not doing as well. And I mean, we got to remember just with CoveredCall ETFs and how they actually pay out a distribution, right? The fund generates dividends, but it generates premiums based on the volatility of the CoveredCall rating. And that typically changes. So distributions act differently than dividends that are paid out by companies. Distributions paid out by ETFs have more of a chance to bounce around. But you know what? The fund managers have done a really awesome job here in Canada of stabilizing it. And yes, no matter what, every month there's going to be a little bit of change, which we can see here with, for the most part, we see CI once again. This is pretty common with all these tracker videos. Usually CI has a bunch that are way at the bottom. They also have a bunch way at the top, simply just because they do not do stable distributions. I wish they did, because I feel like I have to remind the audience every single time I do one of these videos that this is like the CI strategy. I wish these guys would just come out with some breathtaking fund that would just blow us all away, and I don't know. So that is pretty much it for monthly distribution changes of the stable funds that have taken a little bit of a cut. We see LPay and SPay by Global X. Bonds haven't been faring too well in recent memory here, so but potentially opportunities there. So you can always give it a look here on the tracker. Hopefully you enjoyed that snippet from the CoveredCall ETF ALLSTAR tracker. As always, you can pick up the tracker for yourself over on my Patreon. I also have a 2.5-hour video over there if you want to binge watch a month's worth of content from this channel. So that'll include things like the Canadian tab, the performances you see in there, the yield changes, also the American yield changes, distribution changes. I also have some content over there for changes coming to EQCL in a big way next month. The first delisted fund that we can now talk about on the channel. These are all videos that will eventually hit YouTube throughout the month of June, but you can see it all for yourself over there if you so choose. So head on over to the Patreon in the top comment or in the description below, and level up your education with identifying opportunities, red flags with this content, with the tracker, especially if you want to call this your mainstay strategy for the long term. So if you like what you saw, as always, hit all the buttons of the like and subscribe variety, and I'll see you all in the next video.